Trading and investing in financial markets involves risk, so please do your own research and never trade with money you can't afford to lose. Good morning, traders, and welcome to Expert Trader UK's Daily Market Pulse. Today is Monday, November 17th, 2025. This week centers on the October FOMC minutes, with markets parsing how policymakers balanced sticky inflation against a softer U.S. labor backdrop after the recent rate cut. Key flash PMIs in the US, Eurozone, and UK are also expected later in the week, providing crucial economic insights. Canada's CPI hits Tuesday, RBA meeting minutes arrive early Tuesday, and the PBOC rate decision is due Thursday, setting the tone for G10 and APAC FX. US equities face a pivotal stretch as tech leadership wobbles, with recent commentary highlighting a rotation toward defensives. Attention is heightened on megacap earnings and macro data, influencing market sentiment. U.S. index futures ticked higher pre-open after last week's tech-led drawdown, with focus on whether defensive rotation persists. Market focus is on Wednesday's FOMC minutes for added guidance on the December rate path after the October cut. Any hawkish tint could keep pressure on duration-sensitive growth names, impacting their performance. Sector watchers note that a disappointing mega-cap print could amplify volatility given options pricing around marquee names and their outsized impact on the S&P 500. AUD traders eye the RBA minutes for hints on inflation resolve and labor market assessment. A hawkish tilt could underpin AUD, while dovish tones risk renewed downside for the currency. CAD is in focus with Tuesday CPI. An upside surprise could firm BOC expectations and support CAD. Conversely, a soft print would do the opposite, potentially weakening the Canadian dollar. Sterling and euro traders are watching late-week PMIs for growth and pricing signals that could sway BOE and ECB expectations into year-end. Bitcoin slid toward the mid-90,000s after a sharp weekend downdraft that triggered heavy liquidations. This pushed sentiment into extreme fear and wiped out year-to-date gains before a modest bounce. Analysts are focused on key support zones around 94,000 to 93.5 thousand, with a broader 89,000 to 91,000 band eyed if pressure resumes. Intraday bounces are possible amid elevated volatility, requiring careful observation. The risk backdrop and rates path remain key cross-currents for crypto beta as traders assess macro clarity. Gold steadied near the low 4,010s per ounce after a two-day pullback, with traders awaiting U.S. data for Fed cues. Prices remain elevated versus a year ago, despite the recent dip, indicating underlying strength. Brent crude trades in the mid-60s amid a bearish weekly structure, with technicians watching 66 to 67 for corrective tests. Sub-60 risk is present if support breaks, highlighting potential downside. Energy sentiment remains fragile as supply headlines and growth worries intersect. Some desks flag the potential for range-bound trade unless a fresh catalyst emerges. Today's economic calendar highlights RBA minutes, Canada CPI, FOMC minutes, PBOC rate decision, and UK retail sales plus flash PMIs. TipRanks highlights American public education as a perfect 10 smart score name with strong buy consensus. Ultra Clean Holdings is also cited in perfect 10 coverage, benefiting from favorable analyst signals. Thriv Holdings rounds out the trio of perfect 10 names highlighted by TipRanks for potential outperformance. For stocks, watch breadth versus tech leadership on any bounce and defensive rotation durability. For FX, focus on AUD on RBA minutes, CAD on CPI trajectory, and GBP/EUR sensitivity to later week PMIs. For crypto, watch if BTC can hold above the 94,000 to 93.5 thousand shelf to avoid probing the 89,000 to 91,000 zone. Elevated realized and implied volatility argue for caution in the crypto market. For commodities, observe gold's reaction to U.S. data and Fed signals. Also, monitor Brent's ability to reclaim the 66 to 67 resistance band to ease downside bias. This video is for informational purposes only and is not financial advice. All research and market analysis provided by Expert Trader UK. If you found this update helpful, please like and subscribe for more daily market insights.